The euro viral contagion is still going on. The sovereign debt crisis has become much worse. Debt has been repackaged and sold to central bankers who have printed up their worthless confetti to buy toxic garbage. It's a wonderful recipe, don't you think? You came here for the truth, so let me unveil that for you. Today we are going to get into the $1 trillion plus that is at risk. Let's begin. I want to start with this article here out of Bloomberg. Ray Dalio's Bridgewater Associates, that's the world's largest hedge fund firm, has mounted a $770 million wager against Italian financial stocks. It is the biggest disclosed bearish bet in Europe. The hedge fund now has more than $1.1 billion combined riding against Italian companies. They are heavily focused on the financials, but it doesn't matter. We have $1.1 billion betting that Italy is about to collapse. So of course, I'm going to get into the details of why this is very important and how big this really is. Starting with this chart here, Bridgewater's targets. This is the short positions. Financial sector short bets draw the world's largest hedge fund. Among other companies, you may recognize UniCredit. Now, we look at this, for those who don't know, short positions are basically betting that the stocks are going to go down. And this is a very serious thing because you're looking at $1.1 billion. That's not funny money. We're talking about big positions. This company is obviously a very serious company, the biggest hedge fund. So we need to listen and realize what's going on. Europe's bad loan hotspots. German and French banks have amassed almost 230 billion euros of bad loans, according to regulators' data, underscoring the depth of a problem, check this out, often linked solely to Italy. Loans not paid within roughly 3 months. Italy is on the top of this list, but behind them, France, Spain, Greece. These are constantly coming up during the financial crisis, during the sovereign debt crisis, and you will see these actually get more news as time goes on. This hasn't been resolved, although it was claimed to be. The problem is still going on today, and what I term the euro viral contagion is actually getting much worse. This is underscoring what I have said since my first book, then in my second book, and things I've talked about all the time. This is what really underlines this system. What underlies this system is nothing but garbage. Right, looking at this, the ECB, European Central Bank, has encountered stiff resistance in the European Parliament, not only from Italian, but also German lawmakers, to its attempts to clean up Europe's $1 trillion of bad loans. 1 trillion. Now that number is absolutely staggering. Why am I the only one, it seems, out there talking about this figure? I don't understand. Nobody is talking about this. All I keep hearing is about the US stock market. That's it. I don't ever hear about the $1 trillion of bad loans that are in Europe right now. I really don't see how this is ever going to be resolved other than printing up $1 trillion to buy up this garbage. And anybody who calls it an asset, who calls it an investment, is lying. This is garbage. It's bad loans. You can't repackage garbage and tell me that it's an investment. I don't care what your rating agencies rate it at. $1 trillion of bad loans in Europe is no different than $1 trillion of bad loans in South America or Africa or the US. It's all the same garbage. Please understand that, okay? Look at this. Italian banks may face higher loan losses as well as potentially being discouraged from lending. That's according to Societe Generale. Now, while most of the countries on the ECB's supervisory board have been giving banks firm deadlines for setting aside cash to cover potential losses from uncollected loans and loan payments. Italy and some others are said to be pushing back. Of course, they're not going to be able to pay back on what they owe. They know that. But of course, nobody wants to necessarily look too hard into it, because when they find out that all of these companies are insolvent, all these governments are insolvent, and the whole damn system is riding on absolutely nothing, everything is going to collapse. So they need to just say, do you mind please following the rules? Just, if you don't mind, please. We set up some rules and your government didn't even vote on it. Your people didn't want it, but these are the rules. We're imposing them on you. Here's your currency. Here's your one interest rate. You're stuck with it. And if you don't mind, if you could just play by the book. Goldman Sachs is sticking their nose in there. That doesn't surprise me one bit. In the long term, they say that the incentive to restructure non-performing exposures faster will likely limit banks' total losses and eventually the need for outsized capital calls or bank resolution. What I'm hearing here, they restructure the debt in Greece. You've seen this before. What they do is they take all of these really bad, debt. That's what it is. Everything, okay? All that bad stuff. They take it, they package it up, and they call it an asset. It is nothing but an illusion. It is trickery. It is magic, whatever you want to refer to it as. But it isn't an investment, and it should be illegal to make this sold on the markets. And we're talking about big numbers here. We're not talking about, some investor down the street who decides to make a bet on some risky investment. You're talking about nations that have these companies that are too big to fail. And as a result, they will always be bailed out or bailed in. And don't be surprised when this happens yet again. There's no stopping this. The debt must expand. They take all of this and they package it up. And hopefully the central banks will buy it and the taxpayers directly won't have to pay for it. But I don't know. I don't know what they're going to do with it, because ultimately it's such a burden on people. I think eventually it'll have to go on the backs of the taxpayers. They'll cut back places. They'll cut pensions. They will cut in so-called entitlement programs like their healthcare. They'll just keep cutting from what people really need, and they'll make sure that the banks are supported. Restructuring, that's that. When we look at capital calls or bank resolutions, what I think about that is basically bailouts and bail-ins. There will be more bailouts and bail-ins. That's a fact. You have to. I mean, that's the whole point. People don't understand. They think that the system, like what they're seeing in the mainstream media and on whatever the governments are purporting that is reality, is actually just a show that we are watching. What you are seeing is actually the siphoning of wealth from the average person, from the middle class, and bringing it into the hands of the technocratic elite, the globalists. That's what this is all about. It is trying to take wealth away. So they set up traps for people and they do schemes. Whatever is needed, that's the way this works. You will not see resolution. You will not see resolution. Of course, they'll cover it up. Think about this. If you actually look at it by any way, by any calculation, what you're seeing today is worse than what we had seen during the financial crisis. Every single statistic is pointing to that, but we're not allowed to talk about it because people get offended by that. Sure. Most exposed Italian banks underperformed European peers after the ECB rule. They are in big trouble. And when I tell you that I've talked about this before, I put it in black and white. This is actually from my first book, The Money GPS. Spain and Italy are also highly indebted, and the contagion could easily spread to these two highly vulnerable economies. France, although it is Europe's second biggest economy, has many Italian bonds. If Italy goes bankrupt, France will lose badly as a result. What did I tell you? I just mentioned this just previously, that these governments own the Italian bonds, Italian bad debt, and they will lose as a result. I wrote this book. I started writing it in 2010 and towards into 2011. It was finally published in January 2012. I was writing all this because it's so easy to see. And that's at the time where we had the whole sovereign debt crisis and everything else. But it hadn't gotten that bad when I was actually writing the book. I could foresee that. It was obviously very easy because when you have all these risks and fragility apparent, you don't need to be a genius. The ECB purchased billions of bonds for the bailed out countries and are now buying Italian and Spanish bonds to keep them stable. This is no different than the Fed printing up billions to buy US bonds, okay? I said that. I also said this further on in the book here. The eyes are now on Spain and Italy as the cracks have begun to show in their markets as well. Okay, this is talking about here with all the bailouts that we've had to see in Ireland, Greece, Portugal, and others. They're worried about what was happening. What do? They bail it out. I'm talking about this specifically because it doesn't seem to ever be resolved. The problems are always covered up and they're simply made worse. You just blow up the bubbles bigger and bigger and bigger, and ultimately this will have to collapse. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it supports me, so I do appreciate that. I want to just tell everybody that if you want to flip through these books, you can do so at Amazon. The first book, The Money GPS, is about the 4 asset classes, how to profit from them. I get into the history, I get into Europe, I get into the US, China, so many topics. The more recent release, Global Economic Collapse, is about familiar topics. I do get into the Euro viral contagion, and then I also get into different topics such as earning income, reducing your monthly expenses, and so on. So check those out at Amazon. Links are in the description below. Take care.